Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Tuesday, June 11th, 4:43 p.m. Eastern Time. Coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. Market state, we're in an uptrend as of May 6th. Check the trend gauge over here. We've got the green arrow on leaders. They continue to act well. Some recently fell by the wayside. We talked about that in our podcast, which was recorded early. Do you own eggs or tennis balls? Eggs drop and splat. Tennis balls drop, find support, and bounce. We went through 15 names in the podcast. It's already out on YouTube. If you're on the email list, you'll get an alert about that early tomorrow. But our producer's out of town at the end of the week, so we recorded it early. So leaders fine, and then we take a look, as always, at the five major indexes and where they are across three time frames. Bifurcation across short term and medium term, as we've got the S&P 500 and NASDAQ 100 continuing to show strength, while mid caps, small caps, and the Dow show weakness. Now, when we determine our arrows, we overweight the S&P and the NASDAQ 100, and that's why we still have green arrows there across short and medium term time frames. Long term, all five of the major indexes still above their 200-day moving average. As you know, the market never gets into serious trouble until the indexes start to break below that level. All bear markets in history take place below the 200-day moving average. So what happened today? Well, yesterday I talked a little bit about how Apple had their developer conference, and didn't seem to really be anything that stood out as outstanding, as Apple was down 2% on the day. But overnight, a bunch of analysts upgraded their price targets. They apparently liked what they heard. Apple had a mild gap up this morning, and institutions were buying hand over fist today. Apple broke out to all-time highs of 7.3% on the day. I'll explain why we bought Apple after having not owned it for a significant period of time. And it all comes down to relative strength. Uh, Apple goes through periods where it has market outperformance, and also long periods where it's just another stock keeping pace with the S&P 500. We want we seek stocks that are going to give us double the S&P 500, and Apple has a good chance to do that now with this AI catalyst that they announced yesterday. So bottom line is led by Apple. Typical bullish action, which is a weak open, strong close. Second straight week open, ended positive, closing at the highs of the day for the NASDAQ 100 and S&P 500. Here are the final numbers. 21 over 21, more up than down, but when you average them, down by an average of 0.31%. The big eight, very clearly led by Apple, up 1.06% on average, Apple up 7.3%. The RG8, this is our 8 growth ETF composite, 7 down, 1 basically flat, but nothing really bad to the downside. RG8 down 1/3%. S&P 500 opened down 1/4%. By the end, up 1/4%. Equal weight, not so fortunate, down 4/10, as breadth continues to be an issue. NASDAQ 100 opened down 1/4%. Strong rally on the back of Apple, up 7/10 by the end of the day. Equal weight, just barely positive. Dow down 1/3%. Mid caps down 4/10. Russell 2000 small caps down 0.36. Global diversified 60/40 stock and bond. This is 60% ACWI, 40% BNDW. Just barely positive on the day, up 0.04%. Stocks down, bonds up on the day, which means yields pulled back. Our flagship portfolio, GROTECTION, up 0.34% on the day. Some underperformers, some outperformers, and our newest holding, Apple. We'll take a look at that. So let's get into it. We'll start with the S&P 500, and let's 5-minute chart really tells the story. We've got here's the gap down and a harsh sell-off for 25 minutes. But we put in the low before 10 o'clock, and then just as Partially as we sold off, we rallied just as strongly, up near highs of the day by 11:30, an intraday base, and then a breakout, a flag, and a break to the highs of the day by the end of the day. Let's take a look at this on the 15-minute chart as we've been discussing the 4 up days, 3-day consolidation, and at the highs of this consolidation now. So arguably a 4-day consolidation still, and markets can only do one of 3 things: trend up, trend down, or consolidate, preparing for the next trend. And arguably a little breakout here, but just barely. So bulls want to see some follow-up strength to that tomorrow. Technically, I'm calling it uh, 1 day up because it's an outside positive reversal. We made a lower low and also a higher high. So you can see that 53.30 technical analysis works. I'm telling you, what did we do? Bunch of stops below the lows of the prior 2 days. All the stops taken out right there, right before 10 o'clock. Pressure taken off, market rallies. Back to the daily. Good stuff. Nothing else really to say about that. NASDAQ 100 clear breakout here. And that's another reason why I went with the up 1 count when we get to the tail of the tape. Clear breakout, relative strength confirming it. Apple propelling it. Let's go to the Dow Jones Industrial Average. Continues to be relatively weak, but did close at the highs of the day. After a gap down of 0.6, closed down 0.3 into the declining 50-day moving average. Now to the weakest indexes. Here's the S&P 400 small cap. You can kind of see that steep downtrend line, expecting some support here around 2,900. We did undercut the lows of yesterday and finish back in the candle. So that's a possible shakeout. But notice the terrible relative strength on mid caps and also on the Russell 2000 small caps. Relative strength making lows before price. But again, possible shakeout and back into the range. This underperformance never lasts forever. Usually very strong periods of outperformance and underperformance end up flipping and you get the opposite. And in this case, it's now been 1, 2, 3, 4, 5 weeks of extreme underperformance by small caps. The catalyst may be CPI and FOMC tomorrow. If interest rates look like they're going to come back or pull back, that could ignite mid caps and small caps. So there's the 5 major indexes. Let's go on to the VIX. VIX up slightly on the day, but closing at the bottom of the range. Onto the US dollar. Dollar tight action by the close, up 0.12%. Precious metals, gold up 1/3% on the day. These last 2 days inside the big candle of Friday where we had the harsh sell-off on gold. How about gold stocks? Down 0.82%, but again, undercutting the lows of the prior 2 days and into the range. Possible shakeout there. And silver down 1.51%, undercutting, but not even into the body of yesterday's range. Bitcoin, weak out of the gate today, but bounced at the 50-day moving average. Closed below the 21 for the first time in a few weeks. Today's low kind of critical for Bitcoin. Then we certainly want it to hold the 50-day moving average. On to bonds now. Bond prices up across the board on the day, meaning bond yields down. Here's the broad bond index up 0.40%. The long bond up over 1%. The yield on the 10-year down. Sorry, the 30-year is the TYX. That's down 1.3%, and also the 10-year is going to be down as well, down 1.45%. So that's our inter-asset correlation. Let's get to the tail of the tape. You can pause this. Definite opportunity or possibility, almost probability. It's almost a layup that we'll see volatility tomorrow. First on CPI and then even more so on FOMC. Expecting no rate cuts, but obviously the statement and the press conference and Q&A by Jay Powell afterwards always are inducing volatility. Here's the action during the day with the shakeout and then the close to the high of the day as far as sectors go. Not a whole lot to the upside, but Apple, because of the big weight, pushing things around. Tech, biotech, and solar strong. To the downside, banks, uranium, industrials, financials, utilities, and healthcare. Couple of sells in the portfolio, an add and a buy. We sold Bank U as out of the gate. Financial was extremely weak today. So we cut on that when we were selling off. Elf is a nemesis of mine. I cannot ever seem to trade that correctly. I gave it room. It undercut, bounced at the 50-day, got back above the 21 yesterday, was weak early. I sold it and it bounced and ended up nicely on the day. So if you want to use me as a contrary indicator, pile into ELF. So we sold those two, added to First Solar, big strength off of an upgrade, and we bought Apple. Minor slide back in our adjusted beta from 1.52 to 1.48, but the bottom line, second straight week open turns green, closes high of the day, led by Apple. Let's take a look at Apple to start off. And here is why we're going to bring up a monthly chart. And plain and simple, Apple goes through long periods of time where it's just a market stock. Don't look at the chart, look at the relative strength. If it's just going sideways, it's just doing what the S&P 500 is doing. In this case, it had a strong ramp back in uh, from mid 2019 to late 2020. And then that was followed with a period of sideways action for basically almost 4 years. It's just a market stock. So why have the risk? I mean, obviously, you got long-term capital gains in Apple, hold on to them. But same situation happened here from 2012 to 2018. It underperformed most of the time, but the net was it was just a market stock. But before that, massive outperformance here from 2004 to 2012. And with this AI catalyst and the volume that came in today, you don't see this often. 194% on a stock this liquid. Let's look at the weekly chart. Very clear breakout here on Apple. There was resistance at the 200 level going back to 2023, busted through it today on big volume. We started a position in Apple today, and that's the reason why. So let's go to the 2121 list and look at the top five on the day. First Solar, we added to this too. I mentioned yesterday if it broke above this consolidation area, an upgrade was the catalyst. Volume was there today. We added to this today. ELF, here's my nemesis. Let's look at a 5-minute chart here. Sold off in the morning, broke the 21-day moving average. We had a starter position in this. I sold it, and then up, sideways, up. So, like I said, you can use me as a contrarian indicator on Alpha. I just don't ever seem to be able to get this stock right. CrowdStrike, nice strength here, up 2.7% after its gap up after being added to the S&P 500. So certainly not a one-day wonder there. ON breaking up to all-time highs. Next tracker, another one in the solar group at the top of the handle. Let's take a look at what was weak today, and we'll start off with what we stopped out of, BNKU, breaking below this recent range. No big deal. We'll cut bait on that. Take small losses. It's all built into the math of our expectations. CCJ breaking below the 21, but holding the 50-day. TMDX, lighter volume pullback, still down 3.9%. We own that. APP breaking the 21-day moving average and the 50, but then bouncing, possible shakeout there on app. IBIT, we already showed this, and coin very much based on what IBIT does, but bounced at the 21-day moving average the way we needed it to. We'll also show NVIDIA down 0.72%, continuing to be in a tight range here post-split. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. our flagship portfolio is named GROTECTION. It's designed to go to the ponds where the fish are biting. And in this case, it's been big cap tech and leading stocks and leading sectors. That's where we fish when the market is in a strong uptrend. When it goes sideways or pulls back, we lighten up. If it's in a obvious bearish trend, we get the heck out of the way, especially if it breaks below the 200-day moving average. As I said, this is where all bear markets occurred, below this ugly big black line here. We're far from that right now. And with that, I'll wrap it up for Tuesday, June 11th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening, and have a great day.